Happy to take some questions. I'm happy to talk to you guys later if you have anything. Feel free to take a copy, take the Old Faithful index chart, and thank you for your time.
Questions? Yes or no? Are you able to give us, I mean, you might not be across it, 30 seconds on how Macquarie sees the price of oil moving?
The price of oil, I mean, there's a couple of different ones. My old man is Colin Hill, who had the Hill and Co Mobile here, as well as in Goldman South, I think it was, and then around the area and state. I've got a bit of a different view on the Macquarie view on oil. Macquarie view is very similar to everywhere else that says that oil price will rebound back to what is a normal kind of level because of the fact that the costs of supply are currently so much higher than the costs that they're getting. How soon? The issue there of how soon is my differing opinion. You look at the people who are losing out on the oil price: Russia, the Middle East, Venezuela, America. The Western countries don't like Russia, the Middle East, or Venezuela. It's a pretty simple little analogy, but the fact that those prices are going to continue to hurt them, going to continue to pull them into line much quicker than other ways of getting them into line, could well see that the fracking and oil and gas in the US gets supported, much like the farming industry in the US gets supported. The US is a very good chance that they're buying as much oil as they can get at the moment and putting it in the wells. As soon as the Middle East, OPEC, decide to cut their supply, they may just use their own supply to continue to keep those prices low. My thoughts on that are that the oil price will remain quite low for a period of time. It's a lot to do with actually the futures trading, and it has a lot to do with how the oil price moves around. When it was $150 a barrel, the demand and supply didn't really fit that either. There was a lot of speculation on peak oil and so forth. In that period of time, $200 a barrel was what was getting spruiked, so the speculators were running with it.
Matt, isn't it the competition between America and these other countries that's causing the price drop at the moment?
It is, and you could suggest that the Saudis are able to produce oil at $20 or less a barrel, and so they're happy to try and squeeze the Americans out. But for any farmer that's gone head-to-head against US farmers over the years, knowing that they've got a cheap cost, they've found out that the American government's got some very deep pockets. So you continue to you get your assistance from the American government, then you're going to be able to stay in business for a lot longer than you would do in a normal situation. They're shutting off there's certain ones that are getting shut down, and you could have a rebound, but my gut feel is that given the fact that the Americans aren't, and the Europeans and a lot of these areas, that it's very beneficial for their economies to have a rate of petrol per litre at $1.10, $1.11 or lower overseas. This is a straight boost to their economy. So they will be, they're already pouring money into buying bonds and all these programs anyway. They may as well continue to help keep the oil price low.
Just back to the baby boomers, and the last of us are getting closer to retirement.
Yes.
The trend is that they are downsizing and cashing up. Do you see that'll see a boost to the service industry and the consumer goods industry to sustain the lifestyle they want, even though they're downsizing, or do you think they'll become hoarders?
I mean, it'll be certain boosts in certain areas for sure. I mean, they'll definitely take, well, you'd expect them to take advantage of improvements in IT areas and comfort areas to make life easier for them. Whether or not they're going to have the same turnover of goods that you do as you go through being older, your kids aren't there to break all your stuff. I've got 4. I know you think how quickly an iPad becomes an I don't. And we're expecting that, yeah, there's definitely going to be areas, and even though there's going to be there's changes in relation to where they're spending, what they're spending the money on, there's still going to be a lot of good companies and good areas that will be providing that service, will be able to do very well in that area. It's just that what we're seeing is you're not going to get that underlying kind of boost, that euphoria. That, I mean, the pre-GFC 2003 to 2007 didn't really matter so much what we were invested in. It was all kind of going up, and so everyone was just piling in, and that's why it got into so much trouble. There was so many companies that weren't getting valued on the actual books. And now, this is last 18 months we're being valued on the books, and which is really a good thing, but it becomes then how good your analysis is, and from there. There's definitely, it's going to be a shift in what becomes a strong company that's got a lot of demand.
And Matt, do you agree it's a misconception that most retirees, just as they're going into a retirement phase, think that they should cash in rather than maintain their portfolio, given the fact that cash and fixed interest historically have a lower return than the international and Aussie markets, as your lovely index shows?
Go back to the index, there we go.
So people shouldn't just think that they have to cash in there.
Oh no, we're definitely seeing a lot more. I'm seeing a lot more clients, and a lot of my job is hand-holding at the moment, because I've got clients that are so risk averse, and that really don't want to take on any more risk than they have to. But the risk is that they're not going to have enough money to last them through to 95, 100 years of age, which is, I mean, now a lot of the clients that I have are getting towards looking at that as an age they're going to live to, and going to be living well until they're 90 or so anyway. So you can put it under your bed, you can put it in the bank at the moment. If you've got a decent amount of money, you might get 2.4, 2.65, maybe 3 kind of thing. There might be a couple of bits and pieces here, a little bit more than that, but it's not going to be much more than that. It's definitely going to be becoming lower. So you got to say, well, you own the bank rather than having money in the bank, and you're going to get your 5% plus your franking credits, which are an extra. It works out to be 42% extra on that money because of that money coming back to you after tax, even and zero tax. So it becomes a case of apples for apples, and you're going to just put it in there and leave it there and just go on the yield. Then you can start comparing it with that. You don't have to worry so much about the bouncing and the movement of the underlying price, as long as that yield and that dividend keeps getting paid.
So people have changed the way rate boomers have changed the way they spend money. How can they still yield if they're not spending their money?
Well, it's not that they're not spending their money, it's that they're not taking on as much debt as they did do before. And so because of that, you take out a whole lot of debt, and a whole lot of consumption goes out with that as well. And so there's still areas of growth, but the growth is lower than it was before. So it's still growing, but it's not growing as quickly as it did do. And inflation and so forth, the price, it's got a bit of disinflation as well that's happening with prices, and that we've been seeing. I mean, there's a lot of competitions coming in. The grocery prices that have been coming down, oil prices are coming down.
I would have thought another area of growth would be the sustainable energy, recycling type of industries. Are there any picks that you can
In the, I mean,
suggest you,
This-
what's your thought in terms of industry today?
they were struggling to a degree with the oil price at $130, $140 a barrel. The price of oil at $50 a barrel, $55 a barrel really makes the amount of money that governments have got to put in to subsidise these areas very, very difficult. You've either have to have a real breakthrough in a new area that makes that energy a lot cheaper before I can see, just purely from a capitalistic endeavour, people want that to happen, are behind it happening, but if you tell them that they can pay $250 a quarter or they can pay $1,250 a quarter, they'll say, oh, we'll just wait to see it come back down. And I'll keep my, I might go back to seeing if my old oil heater works again. So it's yeah, there's different, the price comparison that you can get with oil really makes it difficult for that area.
I mean, the picture you're sort of painting is that everything is quite flat or depressed for the next few years. I'm taking that oil is going down, that coal prices are down, that gold is not growing, that the Australian dollar is dropping, the demand for housing will come off as people start to not have as many children. The mining sector is not really growing because demand from China is not there. But China is continuing to grow, and they have a 5% compounding growth every year, don't they? India is coming on. I think Brazil will start to evolve in the next few years. And so, to me, I don't know whether it's the mining boom at the moment is just having a bit of a hiccup, or will that grow more rapidly again as the middle classes of India and China start to buy their second car, their second TV, and so on?
Yeah, I mean, there's still going to be growth. It's just we just see that growth is not as high as the previous growth that we had. Will that continue for forever and amen? Probably not. But the issue in the next little period of time, we can see that the growth in relation to earnings per share growth for companies is still going to be quite low, and you're looking at 4 to 6% kind of growth instead of 7 to 8%, which has been the historical average of the earnings per share growth. There's still growth. I mean, they're not staying still. You're not in business just to remain where you are. You're in business to grow. But we see that kind of growth. And this is on average as well. I mean, you're looking at companies that are going to be doing a lot better than that, and companies that are going to be doing a lot worse than that. So you've got to take into account that companies that are well run, that have got good cash flow, that aren't overburdened with debt, that have got good management, are still going to be good companies. Thank you very much.
Actually, can I just pick up on one thing? Mark asked you a question about how long the petrol stay cheap. You didn't give him an answer. No, you said for a while.
No, I said the oil will stay cheap. Dad's still got a couple of service stations, so the price of petrol could well go up from